Bismillahirrahmanirrahim. Assalamu alaikum students. In our last lecture, we discussed books of primary entry. So generally we have 6 type of books of primary entry. These books are also called main books of accounts. That is, the number 1 is sale journal, second one is sale return, third one is purchase, fourth one is purchase return, fifth one is cash, and the sixth one is general ledger, journal. It means every transaction which not fall in the category of sale return, purchase return, and cash will fall automatically in the category of journal. Okay, so let me discuss more about the books of primary entry. So here is some summary related to books of primary entry. These books of primary are also called main books of accounts. So generally we have 6 books of account. So here is the summary of 6 books of accounts. The number 1 is sale journal. Sale journal, also called the name sale day book. Sale day book is the main name of the day book, because books of primary entry also called the second name of books of primary entry called day books. Day books. So number 1 is sale day book, also called sale journal. Second one is sale return day book. That is also the second name of this is sale return journal or return invert journal. There is 2 names of this, sale return journal and return invert journal. We can write this sale return journal also called. Sale return journal. In sale day book, what type of transaction we will record? In this day book, we will record the credit sale. We will record the credit sale. Record sale of inventory item on credit to customer. What's the source document of this sale day book? We will get information from the invoice which is issued to the customer. So the sale invoice is the source document of recording transaction in sale day book. So the second one is sale return day book. Which type of account, which type of transaction we will record in this day book? That is the sale return, as it like its name. We will record the credit sale return. We will record the credit sale return. What's the source document? How can we recognize? How can we know that the sale is returned? The source document will be the credit note issued by the business to customer. If business issue credit note to customer, it means there is a sale return. So we know the sale return from the credit note. So you have to remember this is the MCQ which examiner can ask from you. Credit note is issued at what purpose? You say that in the case of credit sale return. So in case of credit sale return, the business issue the credit note to the customer. So the second one is purchase day book. Purchase day book, also called purchase journal. What type of accounting transaction will record? Will record credit purchase. Will record credit purchase in the purchase day book. So what's the source document of purchase day book? The source document of purchase day book, the purchase invoice received by the business from supplier. So the purchase invoice is the source document of purchase day book. So this purchase invoice will confirm our purchases. So fourth one is purchase return. Purchase return, also called purchase return journal. Also the second name of this purchase return day book, also called purchase return journal. And the other name of purchase return journal is return outward. Return outward means business is returning goods to the supplier. So what type of transaction we will record? In this purchase return day book, we will record credit purchase returns. Credit purchase return. So sale return, purchase return are also related to credit transactions. So all credit transactions we will record in these 4 books of account. What's the source of purchase return day book? The source is credit note received. Credit note received by business or credit note issued by customer. By customer. It is a source document of purchase return. So if business receive credit note, it means purchase return. But if business issue credit note, it means sale return. And the second one is if customer issue debit note. If customer issue debit note, it means purchase return. And here we can write this: if business receive debit note, it means that is the sale return. So the main source document will be based on credit note. So we have to remember this credit note. Credit note issued by business to customer means sale return. Credit note received by business mean purchase return. So you have to remember credit notes. The debit note will be the reciprocal of the credit notes. Okay. Like this, credit note issued mean debit note received. Credit note received mean debit note issued. Okay. The fifth one is cash book and petty cash. What is the petty cash? We will discuss on later. All the cash related transaction will be recorded in the cash book, and all the little expense where cash is being used is being recorded in the petty cash book. So all the cash related income, cash related expenses, cash related transaction will be recorded in the cash day book. So what's the source document of cash day book? Is the checks, counterfoils, bank statement, receipts, cash invoices, etc. Cash invoices. What is meant? Do you know what is meant for counterfoil? What is counterfoil? Did you see a checkbook? Have you seen checkbook? Yes or no? Please tell me. If you see a checkbook, there is a lot of paper in the cash book. A lot of that paper also called the in the business or accounting range, that is called leaf. So there is a lot of leaf, 50, 25, 100 leaves are available in one single checkbook. So if we withdraw some amount from the back, we tore a leaf from our checkbook. So here we write the detail on a check, and that check will be lifted from the this checkbook. So the remaining part left behind this. So the remaining part which is left behind the cash book is called counterfoil. So if we draw, for example, I want to draw $1,000, so we can write here $1,000. So this $1,000 mean the leaf is absence. The absence of leaf mean it is the evidence that we use this check for withdrawal the amount from our bank. So counterfoil is the remaining part associated with the checkbook. And the last one is general. All the transaction except sale return, purchase return, and cash will be recorded in the general journal. Like non-current asset we bought, non-current assets transactions related, all the transactions will be recorded in the general journal. So record transactions that are not recorded in any of the other books of original entry. So what's the source document of general journal? Invoice, bill, or another authorized document. So this is the 6 types of books of primary entry. Any question at this stage?
No.
Okay. As we read earlier that in the books of primary entry, in sale journal, and the second name of sale journal is sale day book. Sale day book. we will record all individual credit sales. In sale daybook or sale journal, we will record all individual credit sale. Then this individual goes to the journal, sale journal, the main journal of the sale ledger. That is, first of all, in the first step, as we read earlier, first of all, we will record the individual ledgers, individual sale ledger of every customer. So assume we have 3 customers, 1, 2, 3 customers. So we will record individual sale ledger. So then total the amount of sale ledger, and this total will go to the journal ledger. So can we say that in sale ledger we will record every individual sale transaction, and in journal sale ledger we will record the total of individual sale ledger? You have to remember this concept. Again, I am repeating, in sale ledger we will record the individual sale of every customer, then we will total the all customers detail, and that total will be recorded in the general sale ledger. So in general sale ledger we will record the total sale. We will record the total sale. If I ask a question, where total sale is being recorded, in a sale ledger or in a general sale ledger? So you have to say in a general sale ledger. And where we will record the individual sale, you have to say, sir, sale ledger. Sale ledger is the source where we record the individual transactions. So here is the summary of the all ledgers transaction. So posting rule, sale daybook. Posting rule is sale daybook, where each invoices is recorded in receivable ledger. Receivable ledger mean sale ledger. Sale ledger mean receivable ledger mean debtor ledger, customer's ledger. So in sale daybook, if we record individual transaction, where we record individual transaction, sale ledger, also called the receivable ledger or debtor ledger. And in sale daybook, if we record total sale, where we record total sale, in sale ledger or general ledger? We will record total sale in general ledger. Get it? Like this one. Individual sales will record the sale ledger, and the total sale recorded in the general ledger. Got it? Got it?
Yes.
Okay.
Yes, sir.
Okay. So these are the all criteria will remain same. Like this sale return daybook. Each return mean individual return. Individual return will be recorded in receivable ledger. Receivable ledger means sale return ledger, and the total will be recorded in general ledger. Same is the case of purchase daybook. Each invoices will be recorded in payable ledgers. Payable ledger is also called as purchase ledger. And the total will goes to general ledger. And here again the case of purchase return. Each transaction, payable ledger or purchase ledger, total in general ledger. Get it? And in the case of cash book, and in the case of cash book, so in the case of cash book, in cash book we deal two types of accounts. Number one is either a income related transaction, either a expense related transaction. So each payment to supplier will be recorded in payable ledger, each payment, and other payment mean sum of payment, total payment will goes to general ledger. So discount from each supplier. So here is a crux of all the books of prime entry. Individual transaction individual transaction either it's related to sale return, purchase return, will be recorded in, can you tell me, will be recorded in individual ledger, and that individual account will be the maybe a sale ledger or a purchase ledger. So sale and sale return, individual transaction of sale and sale return will be recorded in receivable ledger. Receivable, also called debtor ledgers. Here is the crux of all the entire discussion. And individual transaction which is related to purchase and purchase return will be recorded in payable or creditor ledgers. Payable or creditor ledgers. And the last one is sum of transaction, or total sales or total purchase will be recorded in general ledger. Get it? Any confusion at this point? If you have a question, you can ask. Okay, students, if you have no question, then we may move forward. So you have to write all this, okay? So where is the concept of each? Concept of each receipt. So we see the particular receivable ledger. Here is the account of each customer receivable ledger. Each payment payable ledger. Okay. Each payment payable ledger. So where we talk about the total payment general ledger, total discount general ledger, other total receipt general ledger, total discount general ledger. Okay. And the last one is 6 in general ledger. General ledger, also called general ledger. So every transaction which will not fall in the above category of 5 will fall in the general ledger. So here is the list of all books of prime entry. So what we have read in this section, that is, we read the sale day book, we have read this say return day book, we already talked about earlier, and we discuss again in this session. Purchase journal, we discuss this. Purchase return, we discussed already. Credit note, we will discuss the credit note. If credit note is issued, it means sale return. Credit note received, it means purchase return. Now here is the cash book. Cash book. Cash book means cash day book. Cash book means cash day book. So in cash day book, we record two types of transaction. In cash book, the other name of cash book means cash day book. Cash day book are also called cash journal. In cash day book, cash book or cash journal, we will record two types of account. Every transaction related to cash and bank will be recorded in cash day book. So in cash day book, we will record cash and bank associated transaction. So the cash and bank account are used more frequently than any other account. So in this cash book, we will record cash receipts, cash payment, bank receipts, bank payment. So in cash book, we will record cash related transaction as well as bank related transaction. Get it? Get my point? Cash related
Yes, sir.
and bank related transactions. Okay, so here is a detailed and comprehensive question where we can learn and see how the 6 books of account can work. So this is the comprehensive example. Now we will solve and learn how the books of prime entry can be made. Okay, so you have to read this, then I will solve and guide you how to make books of prime entry. You have just read it. Okay, let us solve. So the requirement is prepare relevant books of prime entry. We have to prepare relevant books of prime entry. So before making books of prime entry, we will make the double entry of all the business transactions, and that double entry will help us to make books of prime entry. So we will make the double entry. Now here is the date. We can write date here. Description. Debit and credit. So 1st March, a business started business. Mr. Hasnan started business. Rupees 2 lakh in check. So what will be the entry of this transaction? That is the bank debit, because check is involved. bank debit and capital is credit by 2 lakh. This is the first entry, and the second one is 5 March. That is the purchase of car. If we purchase a car, it's mean car is an asset, car is debit, and the car is being purchased by using check, mean bank credit by rupees 50,000, and here is the 50,000. Okay. Now the third entry is the at March 6 March, purchase of office furniture rupees 5,000 on credit. Credit means here is the liability, so we debit the office furniture, and we purchase office furniture on credit, mean we will pay amount in future, so we will record the liability, so it's the account payable by rupees 5,000 debit and 5,000 is credit. 7th March, bought good for check, it's been purchases, and by using check mean by using bank. Purchase is debit and the bank credit. Amount is 1,200, and the next one is 9 March. In 9 March, bought goods on credit from Iqbal. So we purchase goods from Iqbal, so Iqbal will be our creditor. The entry will be purchases debit because we bought the goods on credit from Iqbal, so Iqbal will be our creditor. So purchases debit, creditor Iqbal. If the creditor name is mentioned, we will record the creditor by its name. Creditor Iqbal credit, the amount will be the 1,100. So 11th March, sold goods amounting 1,500 through check. So there is a sale and the amount received in our bank. So bank will be debit. 11 March, bank will debit and the sale is credit. Amounting rupees 1,500. 1,500, here is 1,500. 13 March. 13 March, sold goods on credit to server. So server is our customer, so customer is the debtor. So we sold goods on credit to server. So server is our debtor. Debtor debit. Debtor mean receivable. So server is our receivable. Receivable. The name of receivable is server. Server receivable debit and the sale credit. Sale credit amounting rupees 2,000. Get it? So the next entry will be on 15 March. That is the business return goods amounting rupees 800, which was previously purchased on check. It's mean business return the goods. It's mean check mean bank debit and purchase return. Here is our purchase return 15 March. So 15 March, the entry will be bank debit because we receive amount in check and we return the goods. So return mean purchase return here because business return the goods. Purchase return. The amounting rupees 15 March. Amounting rupees is 800. So 800 debit and 100 credit. Now 15 March have done. The 18 March business return goods amounting rupees 100 which was previously purchased on credit. So the next entry will be 18 March. 18 March. In 18 March business return goods which was previously purchased. So we know that to whom we purchased the goods. So in the previous transaction we purchased from which person? Can you know this? We know in previously we purchased from which customer? Here is the customer. Bought goods on credit from Iqbal. It means business purchased goods from Iqbal. So in the 18 March business return goods which was previously purchased on credit. It means business return goods amounting rupees 100 to Iqbal. So here is we know that business return goods to Iqbal. Okay. So we will record the purchase return. On 18 March we will record purchase return mean creditor Iqbal. Creditor Iqbal and purchase return. The amount rupees is 100. Use 100. In 19 March, the business good returned to business which were sold on check. Which were sold on check. On the 19 March, there is a sale return. 19 March, sale return. We record sale return. So sale return debit and bank credit. Amounting rupees 500 in 19 March. And 20th March good return to business rupees 200 which were sold on credit. So here is a 20th March. Here is a sale return goods return to business which were sold on credit. To whom I business sold the goods? The customer name. In the previously business sold goods to server. So in 20th March server returned goods to business rupees 200. So we'll record the double entry, that is the sale return debit, receivable, that is server credit. So in the 20th March we record this entry. th March we will record the entry sale return debit, and the receivable server, that is the credit, and the amount rupees is 200. So here is the 200. We record the entry. So here is the last entry. We have to record this. That is on 20th March. Owner withdrew office furniture rupees 1000 for his personal use. It means his owner withdrew something from business, that is the drawings. So we will record 20th March. We will record entry. 25th March. Here is the drawings debit. And owner paid the office furniture, so business furniture will decrease, and the amount of furniture is rupees 1000, so 1000 is debit, 1000 is credit. So we will add one more entry in this transaction, that is the we can add this on March 27th or March 27th. The entry will be for example, honor withdrew office furniture, we have done this. So telephone expense or utility expense, we can say this utility expense paid through check, amounting rupees 500. So here is the last entry that we record in the March 28th. So utility expense is being paid through the check, that is the 500. So we will debit the utility expense and credit the bank. So 28th March, utility expense debit and bank is credit, and the amount is rupees 500, and here is the 500. Okay, so here is some business transaction, and we first record the double entry of all the business transaction, and the next class I will show you how to make the books of prime entry by using the these journal entries. Okay, get it? Now we have to end up our session. You have to revise this all the books of accounts, all the books of prime entries, and remember the name and remember the source document of every books of prime entry. And the correct is this: every individual transaction is being recorded in the sale or payables ledger, and total will go to the journal ledger. Okay, any question?
Okay, sir.
Okay. Now we're going to end up our session, and next session we will make the books of prime entries, how to make. I will show you. Okay, thank you so much for joining. Yourself. Allah Hafiz.